If you're self-employed, conventional loans make it nearly impossible for you to qualify for a home loan and a mortgage loan. Because yes, like you and so many other self-employed people, tax returns just don't tell the full story. So if you struggle with this or you're just frustrated because you just don't think there's an opportunity out there, I'm here to tell you something different. The bank statement loan program is a unique program that allows for alternative income to be used so you, a self-employed person, can truly qualify for the home they really deserve. But before that, we're going to talk about the key areas and the key things that conventional loans require that just don't make it the best program for self-employed people. Number one, using tax returns. Tax returns just don't tell the full story when it comes to a self-employed borrower like yourself. Because we live in the most amazing country in the world, the USA, there's a lot of tax exemptions we get to claim on our taxes. And you, like myself, as a self-employed person, I want to use them to the fullest ability so that I don't have to pay any more money than I need to legally, right? The problem is the more tax exemptions and the more tax write-offs we make, the less net income that we have at the end of the day. And conventional loans are going to take a look at your net income. They're going to want to know what you reported to Uncle Sam. And that sometimes just doesn't tell the full story. Number two is the fluctuating income. As a self-employed person, your income is not standard every week or every month like a salaried person. Very simply, just like myself. However, here's the problem with that. Conventional loans are going to take a look at your last 2 years of taxes. So imagine if you made $30,000 the year before and last year you made $100,000. We need to combine those two incomes and now you have made $65,000 on a yearly income basis. The problem with that is you're actually making over $100,000, but I'm only going to be able to qualify you for $65,000. Tell me that's fair. It's just not. The other one is excessive documentation. If you're self-employed, I'm going to need your last 2 years of tax, the last 2 years of business taxes, your P&L, your balance sheet, business deposits. And if you have more than one LLC, guess what? I'm going to need all of those for the same one as well. It's just a hassle of paperwork, and any little hole in those pieces of paperwork could literally be the difference between you getting a home loan and you not getting a home loan. And lastly, as a self-employed person, you're just viewed as high risk. It's not anything you've done. Just a self-employed person in the eyes of the bank have viewed it as, hey, you don't have a set salary, so we're not going to actually be able to approve you for this loan. And you're just a lot of higher risk because what if your business goes down the drain and just doesn't work? It just doesn't make any sense. But I get you. I've been there. I have clients that have been there. And that's why the bank statement loan might just be the solution and the opportunity for you. So first, what is the bank statement loan? The bank statement loan is a tailored loan for self-employed people that focuses on the actual revenue of the bank rather than what's on the tax returns. So we take a look at the last 12 to 24 months of bank statements and we look at what you've been depositing on a monthly basis, and that will be your income. No tax returns required. Simply put, we take an average of your last 12 or 24 months of deposits, and we apply either a standard expense factor, such as a 50%. So for example, if you deposited $100,000 over the last year, we immediately remove 50% for expenses because we're not looking at tax returns. But here's the beautiful part. If you're in a low expense type of business, such as myself, or like a realtor or something, that you don't have a lot of expenses, you can actually get your accountant to write you a letter and lower that expense ratio. For example, if you make $100,000 per year and your accountant says, hey, their expenses are only 10% of their yearly income, guess what? We can give you credit now for $90,000 worth of income, regardless of what you put on your taxes. Now, tell me this isn't a cheat code, right? Let's talk about the benefits of the business bank statement loan, right? Number one, no tax returns needed. We've already talked a little bit about that, but yes, we don't look at tax returns. In fact, if I submit your tax returns, we can actually get the loan unapproved, right? Number two, reflecting your true income. Instead of focusing on what your tax returns say, we're actually going to look at what's really coming into the business. So if your business is shooting through the roof, we're actually going to take advantage and look at that. Number three is just a flexible approval process. What do I mean by that? Conventional loans follow a very strict set of guidelines, specifically for business people. If you go any part outside of those guidelines, you're not going to be able to qualify for the home. However, on a bank statement loan, these are done by non-traditional banks, which means they have exceptions that can be made. I can make an exception if your credit is a little bit lower than what you want. I can make an exception if you want to put a little bit less money down than what you're required to put down. And I can make an exception on whether you have some sort of credit event like a bank, like a bankruptcy, a foreclosure, late payments, missed mortgage payments, we can work around that as long as there's some compensating factors that allow us to do that. Number 4 is just streamlined documentation. As I said, it's very simple. To verify your income, last 12 to 24 months of bank statements plus your CPA letter confirming that you're self-employed, and it's that simple. Number 5, I believe, is actually larger loan amounts. So on a conventional loan, you're only allowed to go up to, right now in Miami-Dade County, $806,000 for a conventional loan. Anything higher than that puts you in the jumbo loan category. However, for bank statement loans, you're allowed to go up to about $3 million in loan amount, which is going to allow you, probably a self-employed person who makes a lot more money, qualify for a home, still putting whatever that down payment needs to be. And lastly, customizable terms. On a bank statement loan, you have the ability to do adjustable rate mortgages, interest only options, fixed rate options, 30, 15 years, whatever you want. So if this is speaking to you, let me know. Now, if you're watching this and you're wondering whether, hey, is this a loan program for me? Do I actually qualify for this loan? Well, I'm going to tell you right now who it benefits the most. We're going to talk about one, self-employed professionals. If you're a freelancer, a gig professional, independent contractor, anybody who doesn't have a W-2 income, this is going to be that program for them. Other than that, it's business owners with high tax write-offs. If you're a business owner and all you do is write off your taxes because you're allowed to legally, this is going to be the perfect loan for you because we're not going to look at tax returns. Also, commission-based earners. If you're earning commission and the majority of your income is commission, you're going to want to use these tax returns because you're probably going to be able to write off a lot of this income. Other stuff is like new entrepreneurs, immigrant entrepreneurs, and investors or individuals with high net worths. So let's get into what you need to qualify, what documents you'll need to qualify for a business bank statement loan. A business bank statement loan requires a 12 to 24 month bank statement review. So you need to submit your last 12 to 24 months of business bank statements. Secondly, you're going to need an active business. Sometimes you don't need a business as long as your CPA can write that you have been self-employed for over 2 years. That's the key thing. Sometimes we allow under 1 year, but that really does change the guidelines. So rule of thumb, you must be self-employed for over 2 years and have your CPA allowed to say that to you, right? Otherwise, credit score. We can do a business bank statement loan with a credit score of at least a 620 score. Okay. The minimum down payment for a bank statement loan is actually going to be a 10% down payment. Now, again, that does vary depending on credit score, but keep that in mind. If you're really loving this video, I need you to just go down there. I need you to subscribe to this page, like this video, and share it with your friends. Also, go to my page, check out all of my social medias, Instagram, Facebook, all of that stuff, because I actually post daily content there that would actually interest you, self-employed borrowers, as to how you can maximize your income to actually purchase a home that you'd like. Other than down payment, you're going to need reserves, right? The bank, there are a little bit higher risk loans that they would say, the bank is definitely going to need at least 3 to 6 months reserves in the bank, meaning that, hey, once you close on the loan, you have 3 months of mortgage payments left inside your bank account. So the fact that they know that you're not going to default on the loan. And lastly, debt to income ratios need to be a little bit more flexible. Your debt to income ratio is simply put, it's an equation that it is what your monthly income is versus your monthly debts, including your housing payment. You divide your debts by your income, that gives you your debt to income ratio. As a rule of thumb, you want to be under 43% on that. That's pretty much it. That's all you need to qualify for a business bank statement loan. If you want to get approved, shout out. My application link is down below. You can go ahead and qualify, or you can just contact me and we'll figure out what you need to get started. Pretty sure I've just explained why the business bank statement loan is better for self-employed borrowers, but honestly, I put it in one simple word. If you're self-employed, you should be able to qualify for the home that you truly deserve, not the home that the bank tells you can buy just because of the tax returns that you've been doing. So I find it very funny. Sometimes people will declare a lot more in income to pay Uncle Sam their taxes, where they can just put that money towards the down payment of their house and actually keep that money. Because here's the fun part. Whenever you put money towards a down payment, that money's there forever. That once you sell the home, you get that money back. If you try to go conventional route and you want to actually declare more income on your taxes, well, you're going to pay Uncle Sam that money, and that money's never going to come back to you. So you can either try putting a lower down payment or putting a higher down payment and actually having that money work for you and work with you. On top of that, yeah, you might pay a little bit of higher interest, but did anybody tell you that the mortgage interest that you pay is another tax deduction that you get to write off? So as a business owner, there's a lot of opportunity for you in the business bank statement realm that allows you you to actually buy a bigger home, get some more tax deductions, and not have to pay Uncle Sam $1 of your hard-earned money than you already have to. So if you really liked this video and you thought it was informative, like I said, please subscribe to my channel. I'm just getting started out on this, and I really want to know what other questions you have below. Comment below. I'm more than happy to answer. I also will link my meeting link in down there that'll open it up to a 10-minute call, just a 30-minute loan consultation. Any applications that I do don't cost $1. They're soft pull credit reports, so there's literally zero risk for me to analyze your bank statement, see what you're qualified for. But thank you so much for watching. I appreciate it, and I hope that you got a lot of information out of this.